All right, good morning, everyone. I'm going to get going here. All right. This market, a bit of a sideways, non-event of a session yesterday. You can see ended up closing down 2.5 points below flat line. I don't think we were ever down more than 4 or 5. It was just a total non-event. You can see their sectors were mixed across the board. We had Citigroup that was out. That was disappointing. Goldman also disappointing. Like I said, I think a lot of people were kind of onto the Goldman numbers, but both of them definitely a little bit of a disappointment from expectations, but not enough to really get the market to correct, and just kind of reiterating the fact that we're in an incredible bull market at the moment, and all pullbacks are to be bought until further notice. We also had investors digesting some comments from Bernanke, who said that the central bank should still be giving the economy the stimulus it needs, just adding to the fact that we're not going anywhere too soon in terms of interest rates. All right, Asia, we saw same thing, mixed markets. We did see Hang Seng that was relatively solid. Shanghai was down almost 1%. The Nikkei flat. Aussie flat, and the Kospi down just a bit, so not a whole lot going on there. Not a lot of leadership, and we saw Toronto that's dropped on concerns of tight liquidity because of the IPOs and the caution ahead of next week's key data. So China just literally it comes in and disappoints day after day after day. So, but it really seems to make no difference to the global equity market. So it's kind of a slow correction, I guess, slow enough to keep everybody else happy. All right, so we're getting into the meat of U.S. earnings seasons now. Yesterday we had American Express and Intel came in after the bell. American Express basically more or less dead in line, and Intel, that was a miss by 1 cent on the EPS, but a small beat on revenue, so more or less in line there as well. We've got the General Electric out before the U.S. bell. It's probably the best global, diversified conglomerate that we're going to get a chance to look at. It covers a lot of different industries, and it covers a lot of different countries around the world, if I'm not mistaken, most of the countries. So that's a nice one to have a look at today. We've also got Schlumberger, we've got Bank of New York Mellon, and Morgan Stanley. And then today, last day to trade, Clicks, Lewis, and ARLs. So keep that in mind. We're still getting a lot of trading statements out at the moment. We had Trueworth that was out yesterday just after the bell. If I'm not mistaken, maybe a touch better than expectations, but broadly in line. And then this morning we've had Foschini, which look also a touch better than expectations. So, obviously expectations are low there. Maybe we'll see a little bit of a bounce up there. I'm not sure really how the market's positioned, but keep those in mind today if you're involved on the retail side. All right, we had Lawman saying AMCU union workers to begin strike over wage demands January 23rd if the demands aren't met. Here we go again. And then we've got on market data today, we've got retail sales in the UK, we've got housing starts in the States, building permits, industrial production, capacity utilization, manufacturing production, University of Michigan confidence, and then we've got Lacker speaking on economic outlook, later in the evening. So quite a lot in the States, but very little everywhere else. All right, let's get into the maps. Okay, we've been talking about the last couple of days, this sort of shift that we've seen. I mean, retailers have been a total no-go for the better part of 2 months now, I would say. Banks have kind of seemed to have lost their luster of recently as well, but what has continued to buoy the market and take the market to, let's see here, sorry, there we go. Up to highs, recent highs, and basically new closing highs is the mining index now. So let's just pull this forward. Let me just confirm that actually is a new closing high. Okay, so we closed at 42,062. about a week and a half ago, and yesterday we closed at 42,064. So that's definitely not enough to call it a new closing high. 2 points. That could actually end up looking a little bit double topish if we don't start to move higher in the next couple sessions. So just keep that in mind. But bottom line is we're pushing back up to the highs on totally different leadership, and I think that's really important. You know, our miners, which used to be by miles the biggest part of our index, used to account for about 65% of the index only 5 or 6 years ago, probably down all the way around to maybe 30% or less of our index now, have started to lead the charge. And we're going to go through a couple of those charts. I mean, we saw Anglo's. We've seen what that's done. We talked about yesterday might be a second day play. We had an incredible opportunity in the morning to buy at 2% lower than the previous day's close in London. And then the thing literally, as London opened, I mean, it opened up. We were down significantly below that. We had a huge rip higher. And so we did get our second day play. So we'll take that pat on the back. And then Billiton's was, you know, the previous day when Anglo's had that nice run. Billiton's didn't catch any of that, or hardly any of that. We just kind of broke up out of this little flag. And yesterday we finally got the beautiful run out of Billiton's, and we got that on the back of an upgrade out of Citi, and they also upgraded emerging market mining. So very big play out of Citi. What I'd like to have a look at here. In fact, let's look at this. Let's go all the way back to even a 10-year here, just to have a better look at Billiton's, and you can see how important the level that we've just broken out from is. Let's just draw a line that's completely lateral. You know, we're looking at there. There's a little bit of a wiki on the previous breakout, but yesterday I think we more or less really broke through it. I would say we can say definitively. You can see there. See, we're looking just a wick there. So yesterday we got a nice punch through. We got a nice close above that level, and this is a beautiful setup, very similar to the Standard Bank chart that we were all over when we broke through 120. A lot of the guys caught a nice run out of that. This is very, very similar. Obviously, the target on this thing is massively higher. So just keep that in mind. The fact that, you know, we didn't have that run yesterday or the previous day out of Billiton's. We could also get another second day play out of Billiton's today. But I think we broke a key level here, getting above 330 and Billiton's, and I really think that we can continue to trade higher, and this stock has a target, you know, well into the 400s on that breakout over the next sometime in the next year. All right, sticking with the mining complex here, let's look at Kumba. We talked about this the other day, kind of putting in a little bit of a ugly inverse head and shoulders, but I think there's some sort of credence to that nonetheless. Maybe like an inverse table mountain, more or less. But bottom line is here, I think if we can get north of the 449 level, I would even make it round the number off straight to 450. We can push above 450, which is virtually the 200-day as well. You know, that this thing can continue to have legs, and we really can push higher. We did see Exxaro yesterday that the chart looks somewhat similar. Obviously, those two stocks kind of trade similarly. We can see we broke out here from this little consolidation or flag or whatever you want to call this into a bit of a continuation here. That looks like this trend has definitely to an extent reversed. We pushed above the 200-day. I would say we can put a quick target on this thing up to around 58-ish, 57, 58-ish, and maybe even more to go from there. But bottom line is popping up through 200-day. You know, we're starting to see a lot of these mining stocks pop their head above 200-day. Anglo's, Exxaro, Kumba very close. You know, all of these things. It's very important what we're seeing here, and just, you know, realize the swing that we're seeing. You know, it's the first time in years that we've seen a Citigroup come out and upgrade the emerging market mining space. So it's very important what we're seeing going on here, and I think this could be a full-on tide shift. And we kind of called this earlier in the year, talking about cyclicals. We're expecting cyclicals to outperform, and defensives and maybe slightly more some interest rate sensitive stocks to underperform, and that's exactly what we've seen happen so far. Okay, so we're going to look at I'm also going to take that a little bit lower, take that little pop out the top off there, and make it a little bit cleaner here. You know, we looked at this flag pattern in Sunlum and talked about the breakout there. What we've got going on here now is maybe a little bit of a test of some sort of trend support coming in Sunlum, some sort of maybe test of the flag and also lateral support. So somewhere between, call it where we closed yesterday, somewhere between 50 and a half and 49 and a half. I think definitely not a bad place maybe to look to nibble on some Sunlum here on a bit of a support play. Like I said, everything else seems to have lost favor in the last few sessions simply on the fact that the mining space has been the hot sector. It's been where everything's needed to go. We got the breakout here in Sasol, a proper breakout yesterday after a retest at the 520 level. Absolutely beautiful retest. And you can see we popped out the top there, so we're getting it on pretty much everywhere except for maybe the gold miners on the mining space at the moment, and I think it's just attracting money from elsewhere. But at some point, some of these things like the Sunlums and some of the stronger stocks of late may start to also regain bids down near support. And that's it for today, guys. Thanks a lot.